If you're interested in checking out TradeNet, they currently have a sale on their base package, the intro package, where you can get it for 30% off at $350. And that package comes with a funded account with 14K in buying power with a $700 max loss. But there's no PDT rule, and so new traders specifically can day trade as much as they want without necessarily risking what they would if they deposited thousands into a regular broker. And so for new traders, I think it makes a ton of sense. And if you're interested in checking that out, I'll include a link as well in the description. And so thanks for watching and enjoy this video.
A lesson on the rule of three, guys. I got this strategy and how I came to the understanding in that I saw this multiple times happening over and over again, and I've developed a strategy to take advantage of something that plays out consistently. Bull flags and bull pennants, how to best approach them. Bull flags, they just have like a downtrending resistance line. This is where it really comes from. You're getting these tests of that resistance line. And the really unique part of bull flags and why it separates from pennants is that it also combines with an upward trending support line. So you get this kind of flag pattern to go ahead and create it. You get 3 tests of resistance, 3 support tests. And the real key to bull flags is big volume on the breakouts. The unique tip that I can give you guys here is really for those breakouts, what you want to see is a big buyer step up on the point of breakout. So we're really going to break down the strategy, just kind of going basically more into it so that you guys can understand what we're going to be looking for when we talk about it. Let's get into the bull pennants here. The bull pennants are sideways and support with a downtrending trend line. So the real key to differentiate a bull pennant and a bull flag is that when a flag, we have this kind of upward ascending trend line as well. In a bull pennant, we have a sideways support with a downtrending trend line. So you're going to have a solid support line with a nice downtrending support line. There's 3 support tests here. The big tip, is going to be big bids coming up when the support touches. You can pay attention to the time and sales and see that you're seeing buyers buy up every single time it comes down to those supports. The reason why is that you can actually add on supports for these patterns. Just as easy as we add on those, let's say the VWAP for the VWAP fade, this is where you would see those big ads coming in by big traders. Just as well as the bull flag, you want to see a big volume on the breakout, big buyers stepping up on the time and sales. So the comparison, which one's better? I don't really necessarily think that one is better or one is worse. Now they all have positive and negatives. Bull flags, they tend to have more support underneath. This is because you're getting that kind of like that ascending triangle. And with that ascending triangle, you get more levels that are underneath you. So kind of essentially they can protect you. You can use those levels as risk, and you can be tighter or more lenient with your risk. We always talk about how risk can be subjective, and this is exactly where it plays major role. You could be really tight with your bull flags, have a really, really tight stop on the last candle, the last previous low, or you can go ahead and you can be at a bigger support level and hold your wrist down there. The negatives of bull flags can be that they're the most commonly known chart pattern. And by being the most commonly known chart pattern that's out there, there's a lot of fake outs. There's going to be a lot of those extensions where you get kind of a wick past the resistance, but essentially it holds below, the body holds below the stock. And with those wicks, if you go to buy out on just the breakout, you can find yourself a lot of times getting those fake outs. So when we move to bull pennants, what the real key and strength that I've seen from bull pennants is that you have a solid support line. That solid support line gives you that positive known risk. And having that positive known risk is everything in trading. You're going to really be able to understand where your out should be. A lot of times on bull flags, you can have that change in risk subjective. Now on a bull pennant flag, I don't see really subjectiveness in that out. You should definitely be getting out if the stock goes below the support. Reason is it's supposed to be a solid support line and hold. The negative in a bull pennant is going to be that when the pattern breakdown happens, it can be very heavy. I actually attack these as shorts now. When I see bull pennants that build up, have a lot of volume that keeps building in the stock, but it can't break certain levels, I look for the rule of 3 to break down. I look for that fourth attempt to break out. And when it breaks down and the pattern breaks down, I go and I short these based off the time in sales and a pattern breakdown. It's another strategy for another night, but I definitely know that when we get those breakdowns of these bull pennants, you usually have a heavy kind of swing, and you want to get out on that support line. In chart patterns, I call this is a bull pennant. The reason you got the bull pennant is that first thing we're going to talk about is levels, guys. It's always important to draw your pre-market highs. In this case, the pre-market high is right here, right, guys? And before we start the market, we label that high so that we can use that when it starts breaking out. So the real key is the resistance in the pre-market is at 920. It creates 980, guys. Right. 980 is right here. All right. So the market opens, it surges at the open. We get a lot of volume, guys. Goes up to about 215,000 shares going through in 1 minute. We get this first surge. This is what they call the flag, the pole. This is the actual pole of the stock.
That starts at 9:30?
Yes. Okay. It starts right at the open, 9:30, guys. So this is what I call that first sudden surge to resistance 1. Resistance 1 creates up here at 1060s. This is the R1. R1 is resistance 1, guys, that first point of resistance touch. Then you're going to get a move back down. This is where you want to attack and watch for support touch. You're just trying to label the trade out and not trade it yet. All right, so now that we got this support touch, we get this move down to support and make that first support touch. This is where you establish now that you have a support that has become from pre-market that was at 980. Now you wanted to hold those levels, all right? This is what I call fake outs, guys. You get this fake out here, guys, where it kind of gets down. This is just one seller getting rid of his shares here, pushing it down. And then you start getting this sudden surge. Now we get this move to R2, resistance 2. Then when we get that move to resistance 2, we can really establish what I call the trend line in this pattern. The trend line is going to come from resistance 1 to resistance 2. You're going to extend it over, hoping that you're going to get this R3 touch. And then we're looking for the next support touch. As this stock moves, it comes down to a support 2, creates a support touch. From this point on, you just don't want to see it below the support. So at 1045, you get support 2 touch. Then you get a run to R3 here, which it starts really tightening down. This is why I like the pennants, and this is why it can also be negative if it breaks down and comes down this way. But what we're wanting to see is kind of buyers willing to start stepping up here. You'll start seeing them step up on the time and sales, 10:59 and the minute. And what you're going to see is a big buyer step up here at resistance 3 keeping this stock from even making that support 3 touch. It breaks and it holds this now support on this candle, and you get the push up. The way that we can actually trade this, the way we want to trade this is not necessarily always to buy here at the support. You know, some people like to buy here and just risk off of below that. I don't think that's a bad trade, just a little bit more emotional. I like to actually see this last support touch. You could even call this right here support 3, but we never get the resistance 3 touch first. Hold support. Once you see this hold the support and surge, especially near a whole dollar, and you have this now descending trend line to touch that third spot, if you see a break above and it holds above that trend line, as you see the trend line comes down and it actually holds above, that's when you have your buy signal, and you can buy there and risk off of this last low, which was 990, getting in there at 10, or risking down there to the support at 980. This is a trade that you can go ahead and really attack your profits. As you see, this stock breaks out and goes all the way up there to 1140s. Explain this IZEA. This is the next trade example here. The real key, guys, is that I labeled also the profit takes, that where we would take profits in this. Before I continue, John had a big question here. How do you create a channel when it's diagonal? I understand the channel when it's straight across the chart. So the way that I use this is that how do you really create trend lines is you want to see 3 points touch. Trend lines, and you can call them horizontal lines like this 643 on this chart. Those are always going to exist. And what actually happens is that you also get these downtrending lines. And if you start seeing them, they really kind of play out. As you see on both this chart, it actually does it twice and kind of in the same manner gets that volume to really have it explode up. This is what I mean by watching those stocks that sometimes they make the move at 9:30, which is back here in this red candle, or very early. And then sometimes they make the move later. I look for moves 9:45 to 10 p.m. and starting to get that surge of energy. And then around 10 to 10:30 is really the time where I could see stocks also making that breakout. So what I see in this chart is that I see first, we can go back. I don't have it drawn here, but you get this pre-market high there of 630. All right. You get the first wash in the open. We get that washout. It kind of bounces back there, guys, gets into the VWAP, comes down. You could have VWAP faded it, took your first profit there at 570, got stopped out, and you see this stock just kind of surge there, right? The volume picks up. Someone buys it up there at $6. It makes its first resistance run really quickly up there to that pre-market high. 630s gets touched, and immediately it pulls back, creating the support where, guys, at that pre-market support, guys. If you pull a line from right here at 6, you'll get that line all the way across. I'm going to draw out some lines for you so you guys can see it a little bit better.
That's a pre-market high.
And that's the pre-market support.
Yep.
So I'm not going to move the mouse much. I'm just going to explain it now that we have those lines. So now that you see that first surge to resistance 1, you want it to come back down to that support 1 and hold. Once you get that support 1, it immediately comes down. And this is where you could, if you were a scalper, kind of scalp these trades in between. As you see me, I used to scalp them a little bit. I get in right there. But I think the best approach is kind of letting the pattern play out and waiting for that real breakout on these stocks. Later on, you can really measure your risk and have a lot more support in the stock. We get that support 1, that first touch, And then we get that immediate sudden surge to the resistance 2. The resistance 2 finally creates what you can start drawing that downward angle trend line. You want to start it and extend it through the line and look for that third touch. If it doesn't touch or get above it, then you're not going to consider it really a touch. As this stock kind of comes down on R2 and goes, it doesn't come down to the support. It kind of holds there. It gets bought up again, comes up, and doesn't even get to the resistance line before it gets rejected, and it makes a move towards that S2, support 2 here, guys. Once we get that support 2 touch, now we can really establish that as a support. The stock is respecting that level, and now you're going to just look for that resistance 3 test. Once you're gotten that S2, all you care about is that it doesn't break the support. And now you're looking for that third sudden surge. You get that surge to resistance 3. When you get that surge to resistance 3, the only thing you're going to be looking at now is if this stock is going to hold my support. Because if this stock holds my support, all it needs is some buyers to step in. And if some buyers step in, the stock is going to make a sudden surge towards that resistance. And the tightness and the demand in the stock is going to cause it to actually break out. So once you have that R3, it comes down to S3 here, guys. We get a beautiful support touch here right at probably about 595, and it holds at 595. And then you really get the inverse hammer. One of the key signs in Pennants is this small inverse hammer right before I have the green arrow there. The one candle right before it, that's where I try to get in. As soon as that candle closes and I can see that inverse candle, I try to get in with a support and risk off that support where I can do 595, a 5-cent risk, looking to sell my first profit up there at 620. And this way I can risk 5 cent for a nice 20-cent gain, giving me a greater than 3-to-1 potential. We'll get this sudden surge here, right where that green arrow comes. You're going to start seeing the buyers step up there at the whole dollar mark. The only thing you want to see at this point is it hold and close above the downward trend line. That downward trend line, if it can hold above that, you will see the strength step in, and it immediately surges there to 620. This is where you want to sell your first profit. We call this P1. P1 being that first profit. The same way we do in the VWAP fade, we attack that first support. In this case, we're attacking the first resistance, which it created back here. You saw this strong resistance right here. You're going to sell right there. And then what I like to do at this first profit is sell half. If you guys want to do 3/4 and hold the rest, that can also be an option, or even 1/4 and then try to hold 3/4 for the move. I recommend the half. It really takes the pressure off. And at this point, you can leave this trade break even at your 6th entry. So once we sell there at profit 1, we're going to be looking for the breakout towards the resistance that you saw in R1. This is the high of day, and you want to get that test of high of day. I like to sell out some of the shares in this P2 move, and you can keep a tiny bit for the next kind of leg up, but it depends on what kind of trader you want to be. Some people like to attack just the first resistance, the breakout resistance, and that's it. And you're going to be a lot more accurate this way. But of course, if you want to maximize your potential gains, you can always leave a 4th, a 5th after the breakout of the resistance, and then only sell it if it gets below that resistance. In this case, it actually holds, it breaks out and holds, and eventually breaks out all the way up there to $7. So in this stock, it would definitely have paid out to hold a little bit of shares. You see another flag here, guys. This is on CELS. All right, guys.
Beautiful pole there.
Yeah, beautiful. Open comes, guys. Surge. Pew. That's a rocket ship. This thing's taking off, guys. You know, a lot of traders get really excited on these moves. They kind of buy up here at 2380s and get stuck. You got to wait for it to pull back, create that support. Once it creates that support there at 2360, you can just at least draw a line this way and start seeing if it's going to hold that support. What do you get is a sudden surge right back up. Gets a sudden surge, holds back down, and starts creating a line here at 2360s. You start being able to actually connect your bottom trend line. 2 points gives you connection, not confirmation. You need 3 points for confirmation. That's why we do the rule of three. We get that R resistance 1 to break out here, a support 1. It comes up, creates that support 2 here, and you get this drive. Now, this is a perfect example of what I can call a fake out, and why I sometimes don't like bull flags. Sometimes I like them. There's positive and negatives with every strategy, and this is a perfect example. You get this sudden surge of volume. Someone buys it up here at 2380, causing it to erupt immediately. It erupts, but then a sudden seller up there sells all their profit, taking those shares away from the market, causing the stock to immediately come right back down. And this is what I mean by the body of the candle closing above the resistance line. Since the body does not close above, it does not show confirmation, and the trade kind of reverses here. Comes right back down and creates support 3. This is where I actually get in this trade. If you guys can see that little green arrow there, I got in this trade there, and the only thing that I have to look for is if it's going to break this downward trend line now. If it breaks that downward trend line, I need to get out of the trade. But if it breaks above and holds the above trend line, which is this downward trend line, you got this upward trend line. If it breaks above that and holds with volume, then I can look for those nice sells into the resistance and into the breakout. Okay, so in this trade, I actually sell out and panic here, guys. The stock kind of does a little down move, and I freak out and I sell out. As you can see, that little red dot right there, I actually sell out of this trade and it shakes me out. Reason being is I didn't let the stock get below the upward trend line. If I would have let it hold there, I would have been able to let this stock break out, the volume coming immediately back in it faking me out, and it breaking out here. You could sell some up there on the breakout and then hold the rest as it continues going. And you could break even on this trade if you wanted. You know, you could, this is a stock that ended up moving consistently throughout the day. And it goes all the way up there to 2580s, you know, an entry at 2380s. You're making near $1 there on this trade when you could essentially risk 20 cents on this trade. Take your first profit up there at 2420s, 40 cents at your first profit, and then $1 on your second profit there.
And that's 5 to 1 if you're risking 20 to gain 100.
All right.
Nice little 5 to 1 trade.
Yep. So these are perfect examples. Let's do a live trade right quick. All right, guys. This is when it creates the kind of pull here, guys. It's really pushing. You guys see that sudden surge. It keeps pushing. Keeps pushing. Now it's created a tip top, right? This is what we get. It's called the shooting star right there. That's that candle, that 1 minute candle. It's called the shooting star. Shooting star, why? Because the high wick. What does high wick show, guys? It was exactly. There was the pressure right there. Everyone was trying to buy it up, but no one could really push it past. So now we get that pull, right, guys? We're going to be able to really establish the top of the stock. The top of this stock is really holding well, and you guys are kind of excited here. This is when I really start looking at the stock, and I'm like, all right, you know, this stock might be something that's going to really run here. We got some volume there at 780, and now we're going to see it kind of come play down a little bit and make one more attempt to run. All right, guys, you're going to see this sudden surge here. It's going to create our second resistance test here, guys. The way you can create it, zoom out a little bit so they can see kind of the trend line a little bit here. So now what you want to see is kind of a hold there. And you're going to see this sudden surge. It gets up a maximum of 25.66 and going to hold that level. Once it holds that level and you see it create that high right there, gets up there, tests the high. So now once this stock rejects from there, you can start drawing your down descending trend line from that 25.79 to connect to the line of that you just got, the high that you just got. There you go. You draw that trend line and you could extend it a little further, but let's go ahead and zoom forward a little bit. Let's get to 921. As we get this established support here, guys, it starts establishing a nice support here. It gets to a low on the next candle. We're going to see a little dip, a little fake out kind of on the other side. And a lot of times you're going to see these fake outs come. What can really help you here, guys, is that if you use the resistance in the prior move here, you're going to see it hold the resistance in the prior move. That resistance is right there. I like to hold it a little bit lower where the bodies are
Here.
Because those wicks are just price extremes. So as long as it doesn't really break that, this stock is still relatively bullish. Right there. Perfect. And what does it do, guys? It holds perfectly there, right?
Down to the cent.
Down to the cent, right? All right, so at that point in time, you can leave this line. I usually don't start drawing the upward trend line here unless I get a move back towards it. At this level, I'm looking at this more like a pennant, and you're going to see why it becomes more of a flag. Resistance 3 try.
There it is.
Boom. And you're just looking for it to come up there and test that try. As long as it has to actually touch there. You want it to touch. So essentially, you're just kind of waiting. You're still not taking the trade here. You're just establishing your plan.
There's the touch.
There's a touch. And what does it do, guys? It wicks right above it. A little fake out for all those people that just like to buy it right when it touches the resistance line. Now that we get this resistance test, you're going to see it kind of reject right back down. It kind of harmies here and rejects back down. Let's see support 3 test. Let's go to 10.30.35. Now be creating the bull flag. Now that you got those 3 touches, what is that, guys? That's support 3. Support 3, what do we need to see from this moment on? You guys can talk about it in the chat. I'll say it in a little bit. What do you want to see after that last support touch? We've seen that third resistance test. It's come down and touched that third support test. Now we want to see what? There you go, the breakout. The breakout's coming. It just needs to hold support. Big buyers stepping up here and holding support. That's all we want to see it. As long as it holds that upward trend line, we don't have to get out in this trade. And as long as it breaks above that downward trend line and holds above it, that means confirmation. That means the trade is good. So this is where I would like to get in right about here, 936, right about that inverse hammer. You see that hammer right there? That hammer comes out. That hammer right there is where I like to get in here. You can base your risk right off of 25. I like that level 25 right there. 30.32s, that's where I would look to sell that first profit. And then we're going to look for it to sell the rest of it up there at that second resistance or third, which is the high of day, which is 25.80.
Eric had a quick question. He said, do you continue the upward trend line at this point? So he's talking about this trend line here.
You can. Some people like to continue it and use it as a hold. As you see, it respects that. If you want to use it kind of like a trailing stop, you can also use it as a trailing stop.
All right, so it got to that 32 level. I'm going to take the first profit here like we talked about.
Exactly. Let's take a little bit of profit here, guys. And now at this point, you're break even, or you're going to hold to that upward trending line that you want to do. You can use that upward trend line, the one that at the bottom, that the bottom trend line, you can use that kind of like a trailing stop in this trade. And just if it goes below that, get out. Or you can hold break even on the rest, which is what I suggest. So from this point, you're looking for the next sell is only going to be at the high of day and the high of day only. As you guys see this stock start approaching the high of day, you want to sell it as it approaches that high of day. Sell some shares there just in case you get a big seller at that resistance level and you're able to sell with him and take your profit, and everyone else just kind of getting this point where they have to hold and wait for it to retest that level.
You're 79. Take the
Boom.
last half.
Sell right there a little bit and just be like, yep, there you go. Got my little explosion.
Now you can let the rest work.
Now this is where you have to make that decision of just leaving the rest break even and understanding where you want to take your next profit. Use daily charts. I always say that. You guys are going to see right here why I like to sell at the high of day, because a lot of times when you get that high of day break, you get an instant pullback, and that's what you get here. Instant pullback from that 87. And the reason you get an instant pullback is there's people taking profits, you know, and that's normal. The only thing you want to see now is it holding that upward trending line. And this is exactly what this stock does here. A lot of times you can measure the pole and use that as your guidance for maximum potential gain. I like doing that. In this case, it was from the bottom of the pole was 24.70 up to the top, which was at 25.79. So essentially near $1 on this breakout, you can look for it. And on this breakout, you get from a move essentially from 76 up there to 74. So really close to matching the pole of the stock. Right. The essential pole from the breakout of that first inverse hammer back from the lows of 24.69, hold your levels there. From that to the extension of the pole, which was 25.80s or 25.79. And that's how you use it to measure your maximum potential gain, and you could actually attack that level up there. I hope that was a great lesson. It's a lot to take. It's something that I could do 30 lessons on, guys. It's something that's more complicated than our normal strategies, but I hope it's something that you guys can eventually really see and be able to trade.